Hey guys, Boris Laswick from BK Forex Advisor. I'm a little bit under the weather this week, so my apologies for my stuffy voice. This week I wanted to go through step by step the key aspect of my breakout or fake out setup to understand exactly what we do, why certain things work, why they don't, and how can you tell the difference between a breakout and a fake out to become the most effective, the most profitable, the most high probability trader you can possibly be. So before we talk about that, let's just review the exact idea of what I do as far as a session based breakout. We look essentially for price to establish a new direction after it passes the Asian session. So here we have the euro dollar on Thursday, Friday layover, and the Asian session I will demarcate always by around 1700 Eastern time, which is 5 p.m. New York time, to about 2 a.m. London time. So within this parameter is what I consider to be the Asian session highs and lows, and we're going to see what happens in Europe and North America that will either break them to the upside or to the downside. In this particular case, you see that the low here was 37.30, and price breaks 37.30 here at around 5 o'clock in the about 5 a.m. New York time, and continues to move all the way down into a massive break much higher, much further down. So the bottom line is you're only looking for the break of the Asian session, because Asian session tends to be the consolidation session of the Forex market, and price will establish trend either in London or New York, because that's where all the news comes out from. And news is the critical determinant between high probability and a sort of a medium probability trade in the session-based breakout. Because you can have two types of breakouts. You can have a price breakout where price simply breaks out without any fundamental news behind it, which is a weaker and less highly probable effect, because what they're doing is they're simply trying to take out the stops, but they don't have any fundamental fuel to drive the price further in the direction. Or you can have a news breakout, in which case it tends to be a lot more powerful, because not only do you have the break of the stop on a technical basis, but you have the fundamental fuel to actually direct the price into the flow of where the fundamental news is. So that's the critical difference. If you can get a price break on news, you generally have a much higher probability view of the direction of the move. And as I said last week, the key thing that I want to do with this type of setup is you always want to take the break of the price action with a two-lot position, where you will establish one lot, take a short profit on the first lot, let's say, I don't know, 15, 20 points. Generally, I want to take only 15, 10 points on the first position, and then trail the move all the way down. And my stop in all of these setups is never more than 20 points. So if I'm short at 37, 37.35, I'm not going to be able to. I'm going to put my stop at 37.55, because generally, if the price is going to break and then retrace, if it retraces for more than 20 points, you're just wrong, or it's just consolidating, or it doesn't have enough power to really take it through. Occasionally, you may have the price test the level twice, and that's a very tough decision to make unless you have fundamental news behind you. I would never take a price break twice into the move. If I get stopped out on the first time of the price break, I will just simply stand back. But if you do have fundamental news driving it, you may want to, if you get stopped out on the first try, give it a second try and see if you can trail yourself down. So how do we do this week? Unfortunately, this week I was really away from the markets all of the week, so I had very few trades. But I want to show you a couple of examples. None of them, by the way, follow my favorite method of using 2 units and a trail. I'm simply using 1 unit, mainly because I was away from the markets. I wasn't very confident. I wasn't really informed as I should have been in my trading, and I took half risks, which overall actually worked out well, but generally not a perfect setup. So let me show you a couple of things that we did here. So here's the first move. This is pound dollar. Wednesday into Thursday, and as you can see, this is let's just back up here. Asia session highs, lows, right? I'm going to demarcate this for you. So this is the Asian session low, gets broken. Gets broken really on no news. There's nothing going on there in the UK land. So this was a price break. I took the price break again on a one lot position with a very, very tight target, tight stop, and it was just a quick scalp to the downside. I could have made a lot more money had I taken two lots, but in this particular case, I really had very little fundamental drivers behind it. It was just simply pound weakness over the concerns over sovereign debt. Nothing exact at that moment that made me want to take the trade. But still, as you can see, the trade works well because momentum just simply takes you down through the Asian session break. Let me show you the next trade. Next trade is a couple of interesting trades here. This is Euro. Again, I am just not as informed because I'm coming in. This is Asia session break, and I'll just pull back for you to see. As you can see, I'm coming in late. This is me basically trading way behind the price action because I was simply just away from the markets all of this week traveling. So this is me doing sort of very amateurish work, but still works because I'm following my rules in the grand sense. The euro actually breaks the Asian session lows here at around 2 o'clock on the very weak German GDP numbers. But then at 5 o'clock, we get a double whammy of weak European German GDP and Chinese tightening. Now, Chinese tightening is something that was unknown at the time I shorted this. But then as soon as I covered basically again very quickly because I'm at this point I'm just trying to capture small profits. I don't have a very good feel for risk. But the moment that I hear Chinese tightening occurs, I go back into the market and I short again over here. And as you can see, I make my second profit target here. I could have made more money. Again, I very little confidence because I'm just not into the markets. One of the key things that is so important when you're trading these type of setups is to actually watch the markets for 2 or 3 hours prior to really get a good feel. And because I wasn't watching the markets, because I wasn't feeling confident about price flow, my trades were much smaller, both in size and in lot size than they would have been normally. And I didn't get nearly as much out of the trade as I possibly could. Now, lastly, I want to conclude by showing you why it's so hard to fight the man. And I want to show you actually why trading with the flow generally tends to be a much better proposition than fading the flow. Because after all of this brouhaha with the Chinese tightening, we come back and I look at Aussie. Now remember that Aussie the night before had much stronger employment numbers. So I'm thinking, look, they took the Aussie all the way down, and it's nonsense because really, even if Chinese tighten, the Australian RBA is going to have to raise rates because their economy is still getting blown out to such high levels. But here's the point: picking tops and bottoms, generally very much a mug's game. I try to basically pick a bottom here and get stopped out, and I go back into the market because I see consolidation here, and I make half my losses back. But the point being is that trying to pick a bottom here was really a very difficult proposition. You could do it, but going with the flow, understanding, hey, Chinese came in and all of the key levels were broken. Look how much more money I would have made had I simply gone with the flow. The idea here is that the breakout, fake out is dependent very much on news. Flow generally is a stronger trade than counterflow. But counterflow is possible, but a much more difficult position if you really want to do it. And that's pretty much it as far as trading the session-based breakouts and fake-outs. They can really hopefully help you achieve high probability trades. I'm wishing you the best of luck. Next week I am back at the desk, back in the markets. Hopefully we'll have a lot more trades and a lot more setups for you, and at BK as well. Wishing you the best of holiday weekend. This is Boris Schlossberg for BK, over and out.